one of the easiest mechanisms for them to do that is that the United States already has something like 1% of Bitcoin. They already have over 200,000 coins from various asset seizures, and they periodically sell them into the market. So the lowest hanging fruit, if they wanted to do something like that without being particularly kind of dramatic, is to say, well, we already hold these assets, stop selling them and transfer them over to, where we keep our reserves. So that's one option. The other option is just to outright accumulate them. That would obviously have more impact on price, more impact. It'd be a little bit more of a sensationalist type of event. But in general, I do think that the likelihood of some of these kind of unusual policies, either the U.S. deciding to accumulate reserves in general or, get more into the weeds on currency differentials with some of our trading partners, I think that the likelihood of that kind of increases if we get a Trump presidency.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day. Fiscal dominance refers to the situation where a government's fiscal policy, including its decisions on spending, borrowing, and asset management, heavily influences or even overshadows the country's monetary policy. This can have profound impacts on financial markets, as investors and market participants closely watch and react to government actions. A notable example of this is the US government's current holdings of Bitcoin. As of now, the US government holds approximately 1% of all existing Bitcoin, which equates to over 200,000 coins. These Bitcoins were acquired primarily through asset seizures, typically from criminal enterprises. The sheer volume of these holdings has significant potential implications for the cryptocurrency market and broader financial landscape. A low-impact strategy that the US government could consider is ceasing the sale of these Bitcoin assets. Historically, governments have opted to auction off seized assets to convert them into fiat currency. However, this can introduce volatility into the markets, especially given the sizable amount of Bitcoin in question. Instead of selling, the government could transfer these Bitcoins into reserves. This approach could mitigate the market impact, as it would reduce the frequency and volume of large-scale Bitcoin sales, which can cause significant price fluctuations and contribute to market instability. Holding Bitcoin as a reserve asset could also serve as a strategic move for the government. It would align with the growing acceptance and integration of cryptocurrencies into the global financial system. Furthermore, as the value of Bitcoin and other cryptocurrencies continues to appreciate, these holdings could potentially increase in value, contributing positively to the government's balance sheet. In conclusion, the US government's decision on how to handle its Bitcoin holdings is a clear example of fiscal dominance and its potential impact on markets. By choosing to cease asset sales and move Bitcoin into reserves, the government could adopt a low-impact strategy that stabilizes the market and leverages the potential long-term benefits of cryptocurrency. This approach underscores the importance of thoughtful and strategic fiscal policy in managing significant assets in the modern financial era.
Well, so developed markets holding it as a reserve asset is pretty far along the line of success. I mean, overall, the size is also, getting as big as gold or getting as big as kind of the monetary basis of leading countries or getting bigger than any stock market capitalization. Those are also milestones. So overall, that does kind of continue the thesis of Bitcoin becoming increasingly one of the most attractive monies you can hold in the world. I mean, basically, the average developing country currency increases in supply at double digits per year. Like in Egypt, for example, is over 20%, and that's not super uncommon. In developed markets, on average, it's 6 to 9%. Obviously, the kind of the pandemic era blew that out to some extent, but over the past 50, 60 years, you're generally looking at 6 to 9% supply growth. Gold is something like 2% or less, depending on the given year and the given production cycle, but it's pretty remarkably low at between 1 and 2%, usually around 1.5%, but going as high as 2%, whereas Bitcoin has no long-term supply growth after its initial distribution cycle.
Bitcoin supply growth dynamics present a stark contrast to traditional currencies and other commodities like gold. Unlike traditional fiat currencies, which can experience annual supply increases in the double digits due to central bank policies and economic needs, Bitcoin operates on a fundamentally different principle. The supply of Bitcoin is strictly capped and follows a predetermined schedule that ensures its growth rate slows over time. This characteristic makes Bitcoin unique among both digital and physical assets. Gold, often compared to Bitcoin as a store of value, has a supply growth rate that is relatively low and stable, typically around 1 to 2% per year. This low growth rate contributes to gold's long-standing reputation as a hedge against inflation and economic uncertainty. However, Bitcoin offers an even more stringent supply limitation. After the initial distribution phase, Bitcoin's supply growth will eventually reach zero, resulting in no long-term inflation. This deflationary model is embedded in Bitcoin's code, making it fundamentally different from gold and fiat currencies. Looking ahead, the dynamics of global liquidity cycles could significantly impact Bitcoin's position in the financial landscape. If external factors, such as macroeconomic trends, regulatory developments, and technological advancements, align favorably, Bitcoin may experience increased demand and adoption. Analysts suggest that by late 2025, these conditions could create a conducive environment for Bitcoin to thrive, potentially enhancing its role in the global financial system. Thus, Bitcoin's unique supply growth dynamics, coupled with favorable external conditions, might position it as a significant player in future financial markets.
It's already lower than gold in inflation as kind of a percent of supply growth now, and I think it's still kind of below its total addressable market for where it's going to get. There's also just in general, like I think that if we removed those factors from the equation, I think probably by late 2025 will be an upcycle in global liquidity, and so that should over like all else being equal be good for Bitcoin. But obviously there are these one-time events or narrative changes that can come into play. Because one way you can think of Bitcoin is if you look at all the properties, they're obviously very attractive. But then what people do is they kind of have like this risk weighting associated. They're like, well, what is the percentage that the U.S. goes after it? Or what is the percentage that there's some sort of big technical issue with it? Or what's the percentage of, X, Y, Z happening? And so Bitcoin is kind of priced like an option in that sense, where anything that kind of removes some of that that tail risk can have a pretty big impact on the price, because if you say, well, it's already great, but I was worried about this tail risk. And if that tail risk either goes away or gets cut in half, well, then the remaining investment's extremely undervalued. So all of those things are favorable. In general, I start with conservative assumptions of not expecting these kind of like idiosyncratic events, and would be positioned just for a more typical cycle. But then if those events happen, they generally help, increase the odds that you're going to outperform to the upside.
Bitcoin's price dynamics are complex and heavily influenced by market sentiment, much like an option that is affected by various risk factors. One of the primary factors that impact Bitcoin's value is what is known as tail risk, the probability of rare but impactful events. When the perceived tail risk is high, the price of Bitcoin tends to be lower. Conversely, if the perception of these risks diminishes, the value of Bitcoin can see a significant increase as investor confidence grows. Recently, Bitcoin's price has dipped below the $65,000 mark. However, this decline is largely attributed to shifts in market sentiment rather than actual selling pressure. Market sentiment, the overall attitude of investors towards a particular asset, plays a crucial role in the cryptocurrency market. When sentiment turns negative, it can lead to price drops even in the absence of substantial sell-offs. In essence, Bitcoin's valuation is not solely based on direct buying or selling actions, but is also heavily influenced by how investors perceive potential risks and the overall market mood. This makes the cryptocurrency market particularly sensitive to changes in sentiment, which can lead to rapid fluctuations in price. Understanding these dynamics is key to comprehending the recent movements in Bitcoin's price and anticipating future trends in the market.